Good morning. My name is Drew Moore, and I've got Michael Reginelli and Brian Basting, and we are going to digest the March 31st planning and stocks report today. As of right now, a fairly volatile report. We've got corn up 30 cents in the nearby, soybeans down 10 cents in the nearby May futures month, and then wheat up 35 cents. A lot of numbers to digest today, guys. But what's the big takeaway from your perspective, Michael?
Big takeaway is corn acres, of course. That's what is going to dominate the headlines. I mean, we missed by roughly 2.5 million acres from trade estimate to where the number came in. So 89.5 roughly million acres is kind of what the USDA is setting as March intentions. That's much tighter than what the trade was looking for, something closer to 92. So that's going to be what drives it. We got to remember that last year, the March intentions, also from what the trade was expecting, did miss quite a bit in the exact same direction. And we saw a healthy move higher last year as well. But ultimately, that did get rectified. The June acreage number caught it up to some degree. And then the final acreage number made up some of that gap as well. But 2 years ago, it was the opposite situation, where we ultimately had this big mark acreage number, and then we kind of bled it down as time went on. So it'll be interesting to see kind of how this shakes out. But either way, carryouts are going to look a lot tighter going forward as everybody kind of wrangles with the 2022-23 estimates. Anything sub 90 on corn, now you have to assume there will be some rationing with higher prices, but could get a lot of these private carryout estimates down to the billion bushel range, which is awfully tight.
Absolutely. Brian, we've got a very fluid situation in Ukraine right now, and that seems to be no end in sight at this point. But if you look at Ukraine and Russia in aggregate on the wheat and corn export side of the equation, that's going to have a dynamic shift for the next marketing year. Anything from today's USDA report that changes things or shifts more business back to the U.S.?
It really underscores, Drew, the tightness as we wrap up the first half of the crop year and move into the second half of the crop year now for corn. The stocks report was in line with expectations, but now as we start the second half of the crop year, are we going to see the resumption of exports in terms of the port facilities from Ukraine? Because we're talking about several million tons of possible switching from Ukraine to the U.S. And then most importantly, Drew, as we talk about 22-23, will the occupied territories be able to plant corn in 22-23? Will they be occupied by Russian troops, for example? Will they be occupied by Ukraine farmers? And I think really the nuts and bolts are, if you take away Ukraine from the world export picture for corn, Drew, at this point, it's a big swing potentially to the U.S. We'll have to see how that shakes out. One factor to keep in mind, China is a big purchaser of Ukraine corn. And if China is unable to get their corn from Ukraine, they could switch to the U.S.
Sure. Prior to the USDA report today, and as Michael alluded to, we saw a lot of private estimates come lower off of what the USDA had in their outlook meeting at 92 million acres, predominantly because of the fringe acres. Was that the case today?
That was confirmed today, Drew. We did see, particularly in the South, for example, anywhere from 10 to 15% drop in corn acreage compared to a year ago. I thought Michael did a fine job of summarizing the change, though, that is possible over the next 2 or 3 months. When we stretch from March 1st to all the way through the end of June, of course, a lot could change. And as we sit here today, already the bean-corn ratio is collapsing to a new low.
Right.
It's down near 2.1. Now, historically, we've seen that ratio actually dip below 2. And it wouldn't be surprising, given the fundamentals here of this report, to see that happen here. But what the corn market is in a fight for now is to get those acres that, as you said, and the fringe acres are probably already being planted, of course, in the South.
Right.
But we'll move up further north into the Midwest, up in the northern plains. Corn market's going to put up as big a fight as it can to get those acres because, as Michael really did a nice job summarizing, that new crop balance sheet's looking a lot tighter now.
Absolutely. So moving forward, Brian, what's the situation like for the safrinha, the second crop corn in Brazil right now? Is that almost planted, and is that the focus, or is it more weather moving forward?
An extremely important point, Drew. The safrinha crop in Brazil, the planting is complete now as we enter April. The potential is, at the moment, for a record crop in Brazil. The much better situation compared to a year ago. A year ago, the crop got planted late. Due to the late soybean harvest. The soybean harvest was off promptly this year, particularly in the north. we're looking at the potential, underlying the word potential, for a record safrinha crop in Brazil. Now, what's the big impact there? Those bushels would start to enter the world export market as early as mid-July, and especially in August and September. So that would detract from the corn export potential, of course, here in the U.S. Big key, Drew, is what is the weather going to be like the next 60 days? Historically, the dry season starts in Brazil around the 1st of May. If that dry season doesn't start until the middle of May, we could have the largest safrinha corn crop ever. Conversely, if they get into an early start to the dry season, market could get exceptionally volatile.
Absolutely.
And to that point, Brian, there's a 10% or 20% of the crop does look like it's maybe going to be dry for the next 10 to 14 days, right? So we might see that starting a little bit early. So we got to pay attention to that.
Great point, Michael.
So, Michael, we saw the stocks number today, fairly in line with USDA expectations. I mean, do you continue to kind of see a similar stocks, usage and degradation over the next, 6 months, or does that change? And what impact does that have on the cash markets?
Yeah, stocks numbers were relatively mute as far as market reaction today. It does seem to be around acres with higher bean acres, lower corn acres than expectations.
Sure.
Stocks numbers were kind of not, like you said, not terribly far from what was expected. Maybe a little bit tighter on corn, a little bit higher on beans. Mm-hmm. We'll continue to use stocks as demand calls for it throughout the balance of this year. That's just kind of the way we work as we stretch our inventory as supply meets demand. The two things to kind of watch, and one of them Brian just highlighted, is the wild card is going to be exports. What is the actual export outlook going to be? The USDA is currently running, a 1.44, I think, carry out for this coming year. Us at ATI and our research department, Brian and their team, and also many privates out there are considerably tighter than that, just with the potential of Black Sea business shifting to the U.S. So exports are really going to kind of drive the train. We have good crush margins. On the soybean side, we have good ethanol margins. On the corn side, domestic usage and domestic demand seems to be fairly strong. It's the question of there's this lingering potential or this uncertainty on how much of that export demand can actually shift to the U.S. and do we have adequate stocks to actually supply that? So that's going to be kind of the question mark for basis and spreads as we work our way into the back half of the year.
Sure, makes sense. Brian, talk to us about the current weather situation that we have ongoing in the U.S. And how it relates to acreage as you see over the next 30, 60, 90 days here in the U.S.
It has been, Drew, a classic, if you will, La Nina weather pattern across the U.S. here, and mainly that is wet in the eastern Corn Belt. And the forecast will come out this afternoon from the National Weather Service. And we'll take a look at that. That'll be the updated forecast for the month of April. But
sure.
Currently, we're wet in the eastern Corn Belt, and we're dry as you move further west. For example, all the way out in western Kansas, quite dry. Mm-hmm. And also emphasize South Dakota has been quite dry, particularly as you move further west. So
sure.
How it's going to influence things, we're really looking at now the market clamoring, if you will, for corn acres. Corn must be planted before about that third week of May. Otherwise, you're going to degrade the yield potential quite a bit if you plant past about that third week in May. So now the corn market now has a dilemma, if you will. It's got a narrow window of about 6 to 7 weeks here to get those acres in, additional acres. As Michael said, it's certainly possible we'll see additional acres. But if it's wet, that would really constrain that possibility. And we'll just have to see. But right now, I'd say that the conditions overall are good, maybe a bit too wet in the east, a bit too dry in the west. Part of the Corn Belt, they're raring to go.
Sure. Thank you. Michael, last question for you. Ethanol kind of seems to be the net beneficiary of the statement made by President Biden last night to tap into the strategic oil reserves. Does that cause an influx of money to come into the corn market? Do you view commodities as an investment overall with the current landscape moving forward over the next year or so? Or what are your thoughts there in terms of commodities as an asset class?
So yeah, I think a lot of it's going to depend on kind of the bigger picture too. What's the macro outlook? What's the inflation outlook?
Sure.
What are interest rates doing? Like the way commodities are going to be viewed as an asset class has to do with kind of all of those macro factors feeding into it. But ethanol should, in theory, be the beneficiary of this to a large degree. It was interesting this week, given how strong margins are, that in the EIA report Wednesday morning, ethanol run rates were actually down a bit from expectations. So that's kind of interesting. Based on the margin structure right now, you think everybody would be running fairly hard. We'd expect that to continue, though, through the balance here, kind of looking forward. Strong margin environment, higher blending, strong domestic demand, kind of like I mentioned. From an asset class standpoint, it's interesting that we've seen probably a $23, $24 dip in crude prices here just this month, right? And those losses are being accelerated by the talk of strategic oil reserve releases. So that's something to keep an eye on as well. But we've seen some of the managed money in crude. If you kind of look at the net position and the open interest, reduce their exposure over the past 30 days or so. It hasn't had a massive impact to the grain side. We continue to hold fairly long positions in grain, but it's really going to be kind of those dynamics. The volatility in those markets, the uncertainty on demand is really what's going to, I think, combined with the macro factors, is what's going to, what it would take to drive additional commodity investments in grains and oilseeds above the already inflated levels.
Sure. Thank you both for your comments today. And thanks for tuning in to our audience. We'll see you next Friday for the April WASDE report.